17:32 GMT, you're watching BizAfrica. Let's start in South Sudan. The country says it's still exporting oil through Sudan despite a threat from its northern neighbor to stop cross-border flows in a row over alleged support for rebels. Earlier on over the weekend, Sudan mentioned that it would close the two export pipelines with Sudan within 2 months unless Juba gave up any support for insurgents operating across their common border. Now, the row is the latest in a series of problems between the former rivals, and it's threatening to hit supplies to Asian buyers like China's National Petroleum Corporation, India's ONCG Videsh and Malaysia's Petronas, which run the oil fields in both countries. A confirmed closure of the pipelines would, however, be devastating for both underdeveloped economies. They've been struggling quite a bit without oil, which is a main source of foreign currency that they use to fund their imports. Still in East Africa, the government of Rwanda and KT Corporation, South Korea's largest telecommunications provider, have signed a shareholders' agreement to establish a joint venture company to deploy a high-speed broadband network. Now, the network is set to cover 95% of the population in 3 years. As principal shareholders, KT will bring expertise and make staged cash injections to about 140 or so million US dollars. Debt and vendor financing will be sourced to complement these equity contributions. Rwanda's current mobile network operators are invited to invest in the project as well. Analysts expect that these companies and other internet service providers will provide retail access to 4G LTE wireless broadband services for about 12 million end users once the full maturity of the market is achieved. Still on tech matters, the Chinese computer giant Lenovo is stepping up its expansion plans in Africa. It's been rapidly raising its market share here thanks to a clear focus on the younger buyers in the market. But the company still faces a key obstacle. Angelo Coppola reports from Johannesburg.
Tablets and smartphones, the everyday tools of the digital age, and an emerging favorite across Africa. But few people these days want to be stuck with a desktop. This mobile African market is one that Chinese-based Lenovo is determined to dominate. Better known for its PCs, the company is now pursuing what it calls a PC Plus plan, and Africa is at the center of it.
There's a huge appetite for technology, and technology is in a very different format from what we understood from traditional. So I think where you've seen the market slow down in traditional PCs, desktops and notebooks, we've seen this huge uptake on what we call our PC Plus strategy, which is incorporating 3 other windows, which is tablet, smartphone and smart TV.
Lenovo's market share is rising. In Kenya, it jumped from 2 to more than 11% in the past year. Business is also good in South Africa. Lenovo says one reason is its products appeal to young Africans.
40% of the youth in Africa is below the age of 15. So touch technologies that are coming to the fore with smartphone and tablet are really something that is exciting for that youth environment, and it's a new emerging market for us. And I think that has created some of the challenges where we have now had to invest a lot of money in R&D and accelerating our drive into PC Plus.
Independent analysts also cite Lenovo's business model.
Also shows that they're experimenting with formats, but they're also trying to meet the needs of different kinds of users. So it's that all-encompassing approach to computing.
Lenovo appears to be on the right track, but there is one issue that remains unresolved.
Almost every device needs internet access, but in many countries that connectivity doesn't extend beyond the major cities, and it's not going to be fixed anytime soon. I'm Angelo Coppola for CCTV in Johannesburg.
Still in South Africa, the FirstRand Group, which is one of the big 4 banks in South Africa, has announced that it has consolidated its asset management business under one new brand with assets under management of over 110 billion rand. Now, up until now, its asset management businesses were operating within the group. The group was at pains to explain that its new business would operate independently of any of the other units, including F&B, RMB and Westbank, in order to avoid any perceived conflicts of interest.
It was very natural for FirstRand to put together a separate pillar, Ashburton Investments, separate and alongside the banks, and then seed that investment management business with a lot of the investment capability that sat in the bank. And we are looking to provide global investors with access into South Africa, Africa, India and China.
Now, the rand set a new 4-year worst level of 10.362 to the American dollar in late morning trade on Tuesday. That fall coincided with some pretty disappointing April mining production data and a vote by the ruling African National Congress to ban a strike ballot in the latest labour law amendment. Now, 12 to 6 p.m, the rand was bid at about 10.31 to the dollar from Monday's close of 10.16 and Friday's close of 10.05. The rand continued with its very bearish outlook after Statistics South Africa released data which indicated that mining production fell by 0.4% year-on-year in April. The African National Congress used its voting muscle in Parliament on Tuesday as well to remove a clause in the Labour Relations Amendment Bill which would require trade unions to conduct strike ballots before protected strikes could then occur. The final decision, however, could see the continuation of violence and represent a major victory for the trade union COSATU, which had lobbied very hard for the removal of the requirement in the bill for strike ballots. Let's get some more insights into what's happening in Africa's largest economy. CCTV Sumitra Naidu is live in Johannesburg tonight. Sumitra, the rand crashing through 10.28, down to 10.35, 10.36. The all-share indices at the JSE also lower by about 3 percentage points. Give us a summary of what happened on the equities and the currencies from today.
Well, Rama, I think if you want to sum it up, it was an absolutely horrible day on the markets. We saw the rand falling to its lowest level in 4 years to around 10 rand 28 against the dollar. A really sharp fall in the currency, about a 1.5% decline on the day. And of course, you know, there's lots of issues that are really riding on this rand's weakness. We have the labor issues that's persisting in South Africa, putting a lot of pressure on the currency. But it's also an emerging market story here. The rand is falling in line with other emerging market currencies. You're seeing earlier today we heard that Japan had its monetary policy meeting where it decided to keep rates on hold, and the comments that came through with that meeting was that the Japanese economy is looking much better. The prospect of quantitative easing there, that could be stopped pretty soon because that economy is in recovery phase. And of course, we're also seeing the same kind of data coming out of the United States. So this is really putting a lot of pressure on emerging markets. The thing here that economists are worried about is that money will now stop flowing into emerging markets and start flowing back into the developed world. And this is really what's pulling down the emerging market currencies of rand, following suit with all of those currencies. We're seeing other currencies like the rupee also falling sharply in the last couple of days. The rupee has fallen about 6% for May alone. So really disappointing. And of course, the weaker rand didn't help our market today. We saw almost every stock on the top 40 of the JSE falling today. That market ending over 3% weaker. And it was again that emerging market story really hitting the market today.
We've also seen reports of prices of imported goods rising preemptively, if you will, in South Africa. What are the impacts is a weakening of the rand having on the real economy?
Well, I think the real threat here now is inflation. Of course, a weaker rand means that everything becomes more expensive, and it just adds to already rising administered costs like electricity, which is already high in this country. The consumer is expected to be impacted negatively here. They're already under pressure with those higher administered costs. And of course, if we have another move in terms of interest rates, we're thinking that the next move is going to be up. There is going to be further pressure on the consumer. The consumer makes up 60% of this economy, so it's really important. So a lot of pressure coming through there. And of course, we're moving dangerously close to stagflation. We've already heard the Reserve Bank raising its concerns about stagflation. This is an area of low growth and high inflation. And that, of course, is a huge concern. You know, you have countries that can sit in stagflation phase for a very long time. It's really hard to get out of that phase. So it is quite worrying that if we head into that direction, it may take us a long time to get out of that. Of course, it also makes us less competitive. A weaker rand could be helping manufacturers at this stage, but of course, imported goods are becoming more expensive. It is becoming more expensive to manufacture goods locally. So there is the downside of the weaker rand on the manufacturing sector as well.
Indeed. We'll have to leave it there for the time being. Thank you very much for your insights. Of course, manufacturing data coming out of South Africa today also indicated that year on year it went up by about 7%. Base effects, of course, accounted for a fairly big chunk of that in the month of April. We're taking a short break. Here's what's coming up next. There's a mining purge which continues in Ghana. The country's officials have arrested over 50 West Africans accused of illegal gold mining. We'll have the details when we return.
BizAsia. Asia means business.
Welcome back. Ghana has arrested over 50 West African nationals accused of illegal gold mining in a crackdown that has already led to the detention of dozens of Chinese nationals. Now, the country is a major gold producer, and illegal mining is seen as a growing problem there, especially with high gold prices in recent years having helped attract a wave of foreign labour. The government is seeking to end years of weak regulation in the sector, however. According to the Immigration Services, the breakdown of those arrested is 51 nationals of Niger, 2 from Togo, 1 from Nigeria, and 3 individuals who claim to be Ghanaians. A combined task force of police, immigration and national security agents has descended on Ghana's interior to flush out illegal miners, who authorities blame for harming water supplies and the environment of Africa's second largest gold producer after South Africa.
It's not about targeting any particular nationality. For us, the task is to ensure that the degradation that is going on in terms of our environment and our water bodies is halted. We will keep at it till such time that we think some sanity has been restored in that sector of the economy. Until that, I think we will continue.
Now, days after the firm reported a net loss of $56 million for the year ending December 2012, Fastjet's executive chairman David Leniges has stepped down. That announcement came on Monday, with the firm saying the chief executive, Ed Winter, would take over Leniges' responsibilities on an interim basis as a search for a replacement begins. Fastjet aims to create a low-cost airline, a budget airline really, with operations right across Africa. Operations started in Tanzania in the fourth quarter of 2012 following the troubled acquisition of Fly 540. The airline has operated at a significant loss and operating cash outflow since the June acquisition, and its auditors, KPMG, have questioned Fastjet's continued existence as a viable business. In its annual report, KPMG argues that there's, and I'm quoting here, significant doubt on the group's and the parent company's ability to continue as a going concern. End of quote. KPMG says Fastjet not only needs to cut costs, but it also has to raise additional funding to ensure operations can continue for the foreseeable future and secure international route rights out of Tanzania. Troubling day indeed. Let's get some more insight on what's going on over there. Of course, Fastjet is listed in London. CCTV's Miriam Bemard joins us now live from there. Miriam, is there really any link between David Leniges' resignation and the pretty dismal numbers that we've seen coming out of Fastjet?
Well, Rama, there hasn't been a link made, but certainly the company is looking to revamp its image and try to tackle some of the setbacks. It's looking to increase revenue and control costs while securing international route rights out of Tanzania, as you had just mentioned, critical to Fastjet's success in a difficult and unpredictable marketplace. It also wants to ensure that operations can continue to trade, looking at raising equity or selling stakes in the Tanzania and Ghana, that is, operations. Fastjet has also announced it's in initial discussions with a number of Tanzanian investors to reduce its current 90% shareholding.
Indeed. So what next for the business? I mean, at this point in time, it shares about 25% of what they were in January.
Well, you know, the carrier is trying to establish the first pan-African LCC airline by creating a series of Fastjet branded airlines throughout the continent under a common sales and service platform. But it's been plagued by a series of setbacks, Rama. There's the ongoing bitter legal dispute over the ownership of the Fly 540 Kenya, unexpected delays in gaining rights to operated international services from Tanzania as its home base have been delayed. Experts are also saying that it's been trying to enter the South African market, but the Fly 540 subsidiaries in Ghana and Angola are underperforming, and this basically led to the losses that we're seeing now.
Indeed. We'll have to leave you there for the time being, though. Thank you very much for your insights. That's CCTV's Miriam Bemard. We're talking about Fly 540. Of course, being the poison chalice, if you will, for Fastjet, and of course the dismal numbers that came out of their net losses to the tune of about $56 million. Now, the battle for global gaming consumers, billions of them, as a matter of fact, is now on, following the unveiling of a new generation of gaming consoles by the tech giant Sony and Microsoft. Sony, of course, has priced its latest PlayStation 4 console $100 lower than the new Xbox One by Microsoft ahead of the year-end holidays and gift-giving season. Sony said it will sell the latest PlayStation model for $399 late in the year, shortly after Microsoft announced a $499 price tag for its new Xbox in 8 years. Which will, of course, be going on sale in the United States sometime in November. Sony also drew cheers from the audience at the Electronic Entertainment Expo, better known as E3, in Los Angeles. Sony said the PS4 would run second-hand games and it did not require an always-on internet connection. Microsoft had earlier elicited groans of anger and disappointment from gamers when it announced the restrictions on used games for the Xbox One and said players had to log onto the internet for authentication as well.
So you feel the emotions, even to a greater extent than you would watching your favorite TV show or a movie. You relate to the characters, you relate to the storyline, and it evokes emotion and really sucks you in. And I think unless you're a gamer, you've really got to try it to believe it. But you know, it's not difficult to look at that screen and say, oh, that's William Dafoe and that's Ellen Page. And obviously, we could have William Dafoe and Ellen Page's voice if the technology and the graphics weren't there. You wouldn't get that immersive experience.
That should be an interesting battle. Let's see how that shapes up in time to come. Right now, though, quick run through the market. Some fairly dismal numbers coming through, as we just mentioned, with respect to South Africa. Dismal day over there, but elsewhere on the continent, the all share in Nigeria up by well over 2/3. The all share index in South Africa down by 3.12%. Terrible day out there. Same story really in Nairobi. The market ending the day lower by 1.42%, and the Egyptian market on the day ending up higher by 1.5%. That's BizAfrica for you today.